everyone. Thank you so much for joining Beyond Traditional Venture. I'm Tracy Fong, a partner at General Catalyst. It's a firm built out in the last 25 years that has also moved beyond venture. And I'm so pleased to have a really diverse panel here, but really some elites, because it's such a treat to see, having been in tech for 25 years, such an elite set of really interesting ways to differentiate yourself in the business. So maybe I'll wrap up my introduction and then pass introductions down the line, and we can then go through some internet history and then some interesting takes on the industry. So again, I'm a partner looking after the fund of funds at a longstanding firm, General Catalyst. We have been investing in early to late stage for a large swath of what we do. I guess from a beyond venture perspective, we've now covered a venture credit and most recently bought a hospital system in an effort to utilize it as a test bed for some of the activities that we do in healthcare tech. Very unusual in the space. And I look after the venture capital fund of funds. So I'm both a GP and an LP. As with Faisal, which we'll come back to. So with that, we'll just go down the line here. Go ahead, Daniel.
Hello, my name is Daniel Dart. I run Rockyard Ventures. We're an early stage fund focused broadly across the industrial base, going down. So supply chain, manufacturing, down into compute, energy, quantum, stuff like that, but not up. So we don't do space.
Hi, everyone. Faisal here. I am part of Further Asset Management. We're a multi-strategy firm focused on venture and liquid strategies. By background, I've been primarily a builder all my career, building out of as a founder, building as part of an investment firm, and building as a venture capitalist through the model of incubation. And happy to speak to you about these things today.
Hi, everybody. I'm Rick Heitzmann. I'm an entrepreneur. I founded a business we took public and sold, and then about a little over 20 years ago, I founded FirstMark Capital, which is a traditional venture firm doing multi-stage investments with a focus around New York City and a focus around software. So I've been at this for well over 20 years now.
Yeah. Hi, everyone. Alan Keating. I'm most known for playing poker on TV, but I grew up in a startup family and got the bug and wanted to be on the investor side, and figured that the best way I could do it was get my own capital and meet really smart people. So I ran into poker and ended up raising a fund, 2 funds to kind of scale up. Ran 2 of the largest poker games in the country at the same time, and had been making angel bets all the way along.
Well, that's fantastic. Maybe we'll start by level setting the asset class a bit and its history, such that you can understand sort of the drivers of change. And so 5 historical data points for you. In the 1940s is some of the earliest versions of venture capital. And that was led by affiliates of both Harvard University and MIT. Fast forward to 1977, the industry was about $2.5 billion of total AUM, roughly 30 firms, and there was a formation of the National Venture Capital Association, the NVCA. Fast forward to 1983, $12 billion in the industry, 110 firms. And roughly in 1979, they formed the ERISA Prudent Man rule, and that relaxation allowed for more alternative investments like venture capital to be invested by the likes of institutional LPs outside of traditional angels that had been much more active in the market. So you're seeing a sense of institutionalization over time, right? 1990, $31 billion of AUM, 650 firms approximately. It was the PC revolution. And I'm guessing most people in the room have grown up for the PC revolution and through that. And then finally in 1999, $143 billion of capital, 700 firms, and it was, as we all know, the dot-com boom. And so fast forward to today, the geographies have really expanded since the dot-com boom. The VC market today is still majority North America, 63%, but we have a whole global ecosystem that Faisal in particularly will talk about. But certainly parts of the market still have emphasis on that historical Harvard and MIT ecosystem, and now Stanford and some others. From a university perspective, the size, some of the advisors in the market estimate that total net asset value from a quaint market in the $2.5 billion range is now $4 trillion of total asset value, and potentially continuing to grow at rapid acceleration. And it's a wide audience. It includes by structuring angel investing that had been early in the market, now a new delineation of what people call pre-seed and seed investing through to Series A, Series B, and Series C rounds of financing. So hopefully that's a good level set for you. And with that, I just thought maybe sequentially, given the length of time each of us has spent in the market, Rick, would you like to open up? Because you've been in the market since GFC. And
before GFC, amazingly,
oh, yeah.
I originally entered venture capital in the 90s.
That's right.
Somewhere in the middle there, not too long ago.
That's right. And then additionally, post GFC, you were part of the iPhone moment and the App Store. For perspective, the iPhone moment was in 2007, and the App Store opened in 2008.
Yes. So we've seen, and part of what venture is, and having done this for 20 years, there's some timeless elements, and there's some ways that you adjust and shift. And even as we've built the firm, there was SaaS as a transition from a client server world to a cloud-based world. We've seen the adoption of mobile, or actually even before that, wide-ranging broadband internet. Both wireline as well as wireless, and the amount of applications there, and then things like the adoption of mobile, the explosion of the App Store, into today of being in the first couple innings of the AI revolution. So we've seen all those changes, and then you think about where are you as we think about venture capitalists? We want to be on that kind of the edge of the curve, right as things are being adopted. How do we get deeper into things which couldn't have existed yesterday, but have a new technology that can exist today? So in that time, you saw the adoption of Uber and Airbnb, and a lot of things that you could do on your phone that you could never do before. And that's what's happening now, and what does that mean? So you're able to see as these technologies arise, they bring a whole new class of winners. So 20 years ago, Google was fledgling, Amazon was fledgling, even Airbnb didn't exist, Uber didn't exist, Pinterest didn't exist, Shopify didn't exist, and these new eras have created a new era of giants. And I think we're beginning to see that now with AI. As the infrastructure is built out, you're going to see a new class of application winners across the AI spectrum.
That's brilliant, and at each succession of those innovation waves, it creates net new wealth and net new angel investors, and therefore net new emerging managers. And
yes.
And that brings me to Daniel, who's in the emerging manager class. If you can cite when you started, your fund count, and maybe some of your Boston presence and what you've, Austin, times with Boston presence, because the San Francisco Bay Area is still about 53% of the global use markets, but Austin is really punching.
Yeah, so I most of my investments are actually in San Francisco, but I choose to live in Austin just because I really like it. And I really like to fish, and so there's really good fishing in Austin. So it's not super deep, but emerging manager. I don't know. I think to me, we have a bifurcation, right? That's happening, like GC. You guys bought a hospital system, like, and so I think that right now. Like he said, there's new category winners. I think all of the most exciting companies in the world today, like bar none, are private. And I think that we're seeing a segregation of how venture works. And I think there's a lot of really amazing, really smart people that are doing early stage that I think that the market is like you said, going to have massive winners and totally different. My choice is I want to be one of those guys. I think with AI, it's like the birth of fire. And I think fortunes will be made, and I think it's probably the most exciting time to be alive in the history of man. I'm not like an AI doomer. 150 years ago, we were all farmers. Like I don't want to be a farmer. I don't want to, I don't want to go fight in wars like hand-to-hand combat with like, knives. And so I think that like in the future, hopefully we get a lot more free time, and I think we can create an era of abundance, and I want to help fund it.
That's fantastic.
Yeah.
And you've done a really nice job building a community around that too, because
Yeah, so-
I have to nod your Future Titans event.
So yeah, I'll pump it up because I'm really excited. So we
Right.
also lead what I think is the best emerging manager community in the world, actually. And so each year we gather 200 people, about 80 GPs, and we'll have about, I don't know, 800 to 1,000 applications for that, and then 120 LPs, and that goes to the wait list. We have about, I don't know, 250 applied last year, but of those 120, $4.5 trillion, and a lot of stuff happens. And I think, I have a unique background. I went from foster care, never graduated high school, to prison, to the first guy that ever went to MIT from prison. And I'm really good at math, turns out. But I think like VC is like gangs, and so I want to build the strongest early stage alliance and kind of aggressively just fuck people up and just win.
And that's a beautiful story.
Yeah, thank
sharing.
you. But I think that like it's a network-driven business, and if you don't think it is, I think you're either totally ignorant or you're lying to yourself.
Right.
Yeah.
And with that network-driven business, maybe we'll pass it to Faisal, who's invested in blockchain and crypto, the next wave of network-driven businesses, and to just go further afield through to the UAE and global markets that you're focused on.
Yeah, happy to. So for context, we're focused on the future of finance and capital markets. And like I mentioned, we have our venture business and our liquid business. And the genesis of the firm started when we started to think about why are fintechs not scaling in the Middle East. And we realized there's a systematic issue. And one of those is that it's difficult to bootstrap a fintech business. So we said, how about we start an approach where we incubate companies with founders, with balance sheet and the right support, so that we could solve for the early traction problem. So we incubated about 5 companies that are Fund 1, and we were able to demonstrate how, by systematically building companies, we were able to improve the odds of success. So that's how we started, and we evolved over time, as firms do. We added our second strategy, which is basically direct investing as a VC. Because we realized, that building can take up a lot of bandwidth, and while incubation works well, we also thought it's important to have investing pocket, and we slowly evolved to becoming a firm that's focused on B2B use cases for banks, asset managers, institutions. The playbook we built today is we have a portfolio of about 20 companies who have built unique products that could be consumed by a bank or asset manager firm or hedge fund, and we marry those two worlds together. And that's how we're able to make sure we're always close to founders who are building the space, and also being able to work with LPs who invest in our platform, but also use our portfolio for their next big technology or product. So that's been our journey in the further ventures business over the past 3 years. And to your question, we have also evolved from a firm point of view to see how can we also provide liquidity to investors, because with venture, it's one risk return liquidity profile. Investors are eager for liquidity, so we added a liquid strategy that complements our venture strategy. So we've been investing in liquid strategies focused on the crypto market. So that's our LP hat. We have allocated to about 4 managers so far.
That's really effective for this part of the market, and we'll address some of that. Companies staying private for longer and how you might be able to drive liquidity at the fund level, at the portfolio company level, et cetera. So. On your point on payments and financial markets, just thinking about technology, and I think Rick touched on some of this too. It's really increasingly global and borderless, and the payment and infrastructure businesses are a significant total addressable market in that context, and it'll be really interesting to see as it moves into the next AI era. So with that, maybe I'll pass it to Alan. You have a very unique background, and some of the most interesting, differentiated, and net new edge that I've seen on the market. So, and having been an allocator for 20 years, I could say you sit near the top in terms of differentiated edge.
Yeah. I'm proud of it. We're talking about evolution. Listening to you guys, I was thinking about this second bet I made, because the first one I just got straight scammed, like most of us.
Tell us the story.
Well, the second one was a friend. He basically said, I'm going to go build this staffing project out in Colombia. We're going to serve these trucking companies, and we're going to take down their labor cost, and we're going to support them in ways that they can't compete. They compete on price. It's fractional. It's really broken up, and we're going to save them money. Gave them $100K, and ended up, the company now has like 7,000 employees, and it's worth like 700 million. So like,
that's great.
With no dilution, like 300 something X on my second bet. So that was like a nice start, and also like, a little bit of gunpowder. But I evolved into, leaning out, like finding my own adventure, I guess, beyond what came right to me. And that led to playing a poker game in New York. And the next day I went to a crypto conference, met an 18-year-old. He had a pretty clever idea for proof of stake taking over, creating a marketplace. I gave him some money. It fell apart, and I gave him some money to pivot. And those checks were at 5 and 15 million, and that business ended up pivoting into Polymarket, which is now worth 15 billion-ish. 12.
Which is a really notable predictions market company.
Yeah,
Yes.
Yeah.
It's done well. So
Yeah.
prediction on a prediction, maybe. But I keep evolving, and now one of my favorite bets is a company that I have that's created a connection between Bluetooth and space, first ever only. And I'm really ecstatic about that, and I put everything I can into it. But maybe the last thing to add, double tapping this network thing, is in poker, you meet some of the craziest people you could ever meet, and I think that's what it takes to be successful at this crazy game we play. And you also meet some people that have a lot of leverage. So 2 months ago, I was down in Brazil with a friend of mine who I'd known through poker. His name's Neymar. He plays soccer, and he's like showing me around like his whole neighborhood where he grew up, put the gold medal on and all that.
Oh, wow.
And I'm like, by the end of the night, I'm talking to him, and I summon this up. I say, like, do you know how big LeBron James is? And he's like, oh my gosh, he's so big. He's so big. And I can't take it anymore. I'm like, what you don't understand is LeBron's like one of 10 basketball players, and there's 10 baseball players, and 50 actors, 50 actresses, musicians. They all represent this market, and for a startup that wants to, maybe simplify a marketing strategy around someone that has a lot of leverage and awareness, each of those people are divisive, and they don't accomplish the market. And what's unique about you is that everyone in this country knows you and loves you. And this market is extremely attractive. So I just approached him and I said, hey, like, give me a 6-month window. I'm going to door knock all the funds in Silicon Valley. I'm going to index them, figure out who's doing what, and I'm going to find partners for you. And we're working on that now.
That's great.
Well, it sounds like that's kind of an incubation strategy
I'm winging it.
Yeah.
I don't even know what it is. Yeah.
We may all be. And so no, with that, I think one other thing I'd love to comment on between the two of you and Daniel, that is your media strategy, so the use of both conferences as well as some of your media access to high-profile celebrities and your own media. That'd be really interesting to tag on.
You want to go first?
Go ahead.
Oh, okay. Yeah, I look at coming from poker, thinking about LPs, like motivations. A lot of times I feel like it's for the action. On the institutional, on the really big number, the funds of funds, that's not what I'm talking about. But, high net worth individuals, the people that want to invest in me, they want to know what's happening. They want to be involved. They want to see the process. And I look at maybe going back in generations, like This Week in Startups, or what Andreessen's doing in these different groups where they sit down and have these one-on-one conversations. It's not really the sweat that my friends are looking for. And you look at the All In podcast, and they really broke out these current events and interviews, doing an incredible job. But my vision is
Alan has showed up on one or two of those podcasts.
Yeah, I did. My vision is separate. It's I'm creating a series around me evolving as an allocator, investor, and starting a fund. And why I think that's interesting is I think of like everyone in the value chain being improved, not just the LP being engaged and seeing what's going on and maybe bragging to their friends like, hey, did you see that episode? But the projects that I invest in, they'll have awareness. My last YouTube video had 500,000 views, and out of that's going to be several hundred venture capitalists, several hundred hardware people, several thousand software people, customers. I'm creating this value that they recognize, and that improves my ability to allocate capital with them. And I'm also like creating my own brand that I can continue to leverage. So, that's how I see it, as more like storytelling and character building moving forward. And so that's what I'm working on.
Yeah.
And how about yourself, Daniel?
I mean, I agree with everything you say, to the point where just figuring out what your lane is and like leaning into your superpower. I think at times when I think of brand, like I think a lot of times people think it's like a one size fits all thing, or like, hey, you should do this, you should do that. Like I'm not on Twitter. I don't do YouTube. To me, I'm more of thinking like, hey, where can I create the most leverage for me, and what does that look like, and what is something that I want to be able to do for the next 10 or 20 years. And so for me, I built Future Titans to kind of give like a shout out, super successful guys. One guy, Rick, I think he's been on Midas List 5 times. Like if I go up against head-to-head Rick and a founder picked me alone, I'd probably be worried that the founder's an idiot, right? And so the easy way to do that is like, I'm a smaller fund. Well, can I create alliances with like 3 or 4 smaller funds? And so in order to do that, I need to know who all the emerging managers are. I need to know who is the best. And then I can only cover, with my team, maybe 8% of the market. But if I trust their point of view and they can cover 12%, I cover there. Now, all of a sudden, together, we can cover 62% of the market. And collectively, we can go fight Rick, And then over time,
Looking forward to it.
yeah, I think, and I don't mean like fight in a literal way, but I think, I think if you don't enjoy the competition, that's like the best part. Is sometimes like he'll win something like, I got you, and you're like, oh.
Competition and cooperation, right?
Competition and cooperation, right?
Like legion of superheroes to go fight.
Yeah, like I hope it's clear. Like I have a significant amount of respect for him, right? And so to me, like that's how I'm going to build my leverage, and that'll look different 5 years from now, right? And so I think to me that's kind of built my brand. And we have a tattoo booth at the event, and 15 people got tattoos last year. It's crazy. and so doing things that I think I can do authentically that other people can't replicate, and then doubling down on that.
I think that's the key thing with brand, right? You want to be authentic to your brand.
Yeah.
And then you want to find entrepreneurs or colleagues or syndicate members who are authentic to that.
Yeah.
And so you know who you are. You could tell your LPs that, you could tell entrepreneurs that, you could tell your partners that, and therefore you know your lane. So, hey, I don't tweet, but I do tattoos, and I
can't do the tweet thing. I'm not good at it. I tried. I'm like, this is so uncomfortable. Yeah.
Wow, yeah. It sounds like all of us, spend time compounding our strength, and hopefully you've heard some of that today, because the market has gotten a lot bigger, $4 trillion of net asset value. And it's partly in the context of companies staying private for longer, partly in the context of net new company creation with novel innovations. Maybe touching on some of that, in a couple of statistics, in '99, the median age of technology companies going public was about 4.5 years. And today, fast forward, it's by 2024, it was 14 years. And there's been an uptick over the last 20 years since 2003, post the tech boom and bust. So, you lived a lot of it.
I've lived through a lot of those cycles. When Microsoft went public, it had 1.3 million of revenue, and Cisco went public at 2.3 million of revenue. And Amazon, I think Amazon was 14 months from their Series A to their public financing. Right now it's over 15 years. So we're seeing two different dynamics. One, companies are staying private longer. And what does that mean? That now companies are staying private for about 4.7 additional years, according to Morgan Stanley. But the outcomes are 6.7 times bigger than what they were. So what's happened is the private markets have captured the small cap tech ecosystem. So you're not seeing, when I started this, there was $40 to $60 million IPOs done by small banks in the hundreds of millions of dollars sector. That's all been eviscerated, and now you're talking at companies going public at $1 trillion, and you've completely eliminated the opportunity for the public and for small cap managers to capture that. So you're really looking for venture firms who have the ability to be both early and growth stage to capture a lot of those excess returns. And therefore, you have to have kind of two strategies to do it. You have to be able to have that growth strategy so you could follow those companies as they mature and progress, and you could compound in your winners. And then you also have to be able to really understand the off-ramps. So some LPs, I'm sure some people are like, okay, this is great, venture's great, you're compounding even the private markets, but do you really want to be in something for 15 years? And that talks about the advent of the secondary markets, which as people hear about are increasing, and then being very thoughtful and deliberate about how you use the secondary markets as a venture capitalist, whether you're an early fund or whether you're a later stage fund, and why and how you're using that. And I think we're right at a tipping point of the secondary markets becoming a really important part of the ecosystem. To maybe relieve some pressure on GPs and LPs as that evolves. And we could talk more about that, or we could share that, but it's a really important part.
100%.
Yeah, I've been involved in secondaries since the global financial crisis as well, and it's a tremendous outlet for LPs and GPs. And go ahead.
And so I also think with venture, there's a trailing effect that people aren't really aware of. And so I think right now, if you're not in early stage growth and secondaries, you'd be like, oh, my returns are here. But I think actually you won't know until 7 years from now. Because I know so many people that have $10 billion, $50 billion companies, and they're like, yo, I can offload secondaries right now at par. I have no desire to be a public company CEO. Yeah. And so the idea that you're going to capture that not participating in this, I just think is not true. But I don't know that you'll be able to point at it for another 7 years, even though the time is now.
Well, yeah, you have to start talking about it now, because what you're going to see is maybe differently than how venture capitalists traditional were, where you were buying then holding to a liquidity event. Venture capitalists have to be a lot more intelligent about the secondary markets and the public markets, because in other types of investment managers, you have to be both a buyer and seller of those securities, and you have to be thoughtful about your entry price and how you get out and how that drives liquidity and how that drives returns. And you have to be aware of all these off-ramps, because to be a good steward of capital for your LPs, you need to be able to be thoughtful about both buying and selling, where that was not a skill set you might have seen 10 or 15 years ago.
That's right.
100%.
And one last evolution before we wrap up is the evolution and advent of the token marketplace and your liquidity profile, Faisal. So with maybe a minute or two, if you could wrap on that, and as the next novel way to exit and create liquidity, that'd be wonderful.
Absolutely. So from our side, we've launched our liquid strategy last year, and we started to think about how can we leverage liquidity towards our venture portfolio as well, especially that a lot of them in the world of fintech need access to this liquidity at the pre-seed and seed stage. And since we have exposure in tokens and blockchain, we thought that the two pockets are quite synergistic. So that's how we launched our liquid strategy and launched our new topco to create that funnel between the two. And also with regards to our LPs, we also have a set of strategies where we're able to provide them with liquidity through delta neutral strategies. So this can help them to consider how much they want to allocate to venture and wait for 5 years plus liquidity versus having annual cash flow coming in from this platform play. So that's the second way that we talk about liquidity.
Yeah, and having been in the Bitcoin research ecosystem for the last decade, can you believe that we have participants for the last decade plus in crypto, blockchain, and Bitcoin? It's a really attractive mechanism. Entrepreneurs are kind of deciding whether you pursue a traditional pre-seed, seed, safe round of financing or something that might give them liquidity a little earlier. So there's different liquidity options at different levels, whether it's the company and project level through to the portfolio level through to the fund level, portfolio companies being sold, or the fund level LP secondaries being sold. So as you can tell, it's a dynamic market. These are some of the most interesting participants I've spoken to in the market, and let's applaud them and the contribution they've made to the market.